A groundbreaking cryptocurrency market structure bill is poised to transform the digital asset landscape as the White House confirms its imminent advancement. With a potential market impact worth $6.2 trillion, here's what we know about the unfolding situation. On May 5, 2026, significant developments emerged from Washington, D.C. concerning cryptocurrency regulation. At 10 a.m. EST, the White House confirmed that a long-anticipated market structure bill for Bitcoin and other cryptocurrencies is set to advance this month. The announcement came from Patrick Witt, the White House's top crypto advisor, during a press briefing. President Donald Trump has publicly urged lawmakers to expedite the passing of this legislation, stating it could unlock billions in sidelined institutional capital. This bill is seen as a game changer, with industry experts predicting it could trigger a significant surge in Bitcoin prices, potentially reaching levels around $90,000. This projection is particularly shocking given the current market conditions, where Bitcoin has struggled and is down approximately 10% year to date. The cryptocurrency sector has faced intense scrutiny from regulators in recent years, leading to uncertainty among investors and a cautious approach from major financial institutions. Previous discussions around regulation have been fraught with delays and political disagreements, but the current administration's push signifies a marked shift in attitude toward embracing digital currencies. The indicated urgency and political backing from the highest levels mark a pivotal moment for the cryptocurrency industry, setting the stage for transformative changes. Investors are bracing for what some analysts describe as a Bitcoin price earthquake that could reshape market dynamics entirely. The anticipated bill is expected to provide a clearer framework for institutional investors, potentially leading to increased participation from hedge funds and pension funds that have been hesitant to enter the volatile market. This influx of institutional capital could stabilize prices and enhance market credibility. The implications extend beyond Bitcoin itself, as the entire crypto ecosystem could benefit from enhanced legitimacy and investor confidence. Looking ahead, the successful passage of this legislation could catalyze a new era for cryptocurrencies, transforming how they are perceived in the financial landscape. With more regulatory clarity, we could see a wave of innovation and investment in blockchain technology. The next few weeks will be crucial as lawmakers prepare to deliberate on this bill. As discussions progress, the outcome could set the tone for future regulatory frameworks, influencing the trajectory of digital assets for years to come. The implications of this legislation are profound and far-reaching. If passed, the bill is expected to provide a regulatory framework that could enable institutional investors to enter the cryptocurrency market with confidence. Currently, billions of dollars remain on the sidelines due to regulatory uncertainties that have plagued the crypto space for years. This legislation could potentially open the floodgates for these investments, leading to a dramatic increase in Bitcoin's market capitalization. Analysts are particularly optimistic, projecting that Bitcoin prices could soar to $120,000 within the year, a significant milestone that would reshape the financial landscape. The context surrounding this bill is critical. Over the past decade, cryptocurrencies have evolved from niche assets to mainstream financial instruments, yet regulatory clarity has lagged behind. Many institutional investors, including hedge funds and pension funds, have been hesitant to commit substantial capital without a clear understanding of the legal landscape. This legislation aims to address those concerns, creating a more predictable environment for investments. By establishing clear guidelines, the bill could enhance investor confidence, encouraging a broader range of financial players to participate in the crypto market. As companies and financial institutions begin to navigate this new regulatory framework, the potential for innovation and growth in the sector becomes increasingly apparent. The immediate consequences of this bill could be felt across various sectors, including technology and finance. As institutional investment increases, it could stabilize prices and enhance legitimacy, offering more secure investment opportunities for everyday investors. This shift toward mainstream acceptance signifies a watershed moment for cryptocurrencies, moving them from the periphery of financial markets to a central role. Furthermore, the potential for increased taxation and regulation might lead to better consumer protections in the crypto space, an aspect often criticized in the current environment. Looking ahead, the outlook for the cryptocurrency market hinges on the successful passage of this legislation. If enacted, it could pave the way for a new era of investment strategies and financial products centered around digital assets. The ripple effects of this change would likely be felt globally, influencing everything from payment systems to investment portfolios. Ultimately, the financial landscape may soon witness a transformative shift as digital currencies gain unprecedented acceptance and integration. The journey to this moment has been long and tumultuous. Over the past few years, the cryptocurrency market has faced significant regulatory challenges, creating an environment rife with uncertainty. The discussion surrounding the need for a comprehensive market structure bill has been ongoing, gaining momentum particularly in the last 18 months. Key industry players, including major exchanges and blockchain firms, have been advocating for clearer regulations, arguing that they are essential for the growth and stability of cryptocurrencies. Previous attempts to introduce similar legislation have often stalled due to political disagreements and market volatility. However, recent market trends have significantly changed the landscape. A notable rise in Bitcoin mining profitability, coupled with increasing institutional interest from hedge funds and traditional financial institutions, has underscored the urgency for regulatory clarity. This shift has prompted a reevaluation of the existing regulatory framework. The urgency from the White House indicates a recognition of the potential economic benefits that a regulated cryptocurrency market could provide. Lawmakers are particularly focused on addressing consumer protection and financial stability concerns, which have been highlighted by recent high-profile market collapses. This backdrop of heightened public and political interest sets the stage for today's announcement, marking a crucial turning point in the relationship between the government and the cryptocurrency sector. The implications of this legislation could reshape the industry, providing a clearer path for innovation while ensuring necessary safeguards are in place. As we look ahead, the focus will likely be on how these regulations are implemented, especially regarding compliance requirements for new and existing market players. The next few months will be pivotal in determining whether this newfound regulatory clarity can foster a thriving ecosystem that balances innovation with responsibility, ultimately shaping the future of digital finance. In a significant development for the cryptocurrency market, a new bill aimed at regulating digital assets has been proposed in Congress. This initiative could fundamentally change the landscape of cryptocurrency trading and investment in the United States. If the bill is rapidly passed through Congress, we could see immediate market reactions, potentially pushing Bitcoin prices up to the predicted $90,000 threshold within the next few months. This price surge would reflect not only increased investor confidence, but also a broader acceptance of cryptocurrencies as legitimate financial instruments. However, the path to passage is fraught with challenges. Political disagreements could delay the bill's progress, leading to continued volatility in the crypto markets. The uncertainty surrounding regulatory measures has historically caused price fluctuations as investors react to the potential for increased oversight. Economic analysts suggest that if the bill does pass, it could usher in a new era of regulatory clarity that would attract institutional investments and stabilize the market. Institutional players who have previously been hesitant to engage with cryptocurrencies may feel more secure in a regulated environment. In terms of impact, the bill could redefine how cryptocurrencies are perceived, transitioning from speculative assets to more stable investment options. This shift could also pave the way for innovations in blockchain technology and decentralized finance. Experts recommend closely monitoring legislative developments and market responses over the coming weeks. Key indicators to watch include any shifts in Bitcoin trading volumes and institutional interest levels, which could signal broader trends in the market. As we stand at this crossroads, one critical question emerges: how will the cryptocurrency landscape evolve if the proposed bill is enacted? The answer may shape the future of digital assets and redefine financial markets for years to come. As we contemplate the future of cryptocurrency regulation, what do you think will happen if this bill becomes law? Share your predictions in the comments, and don't forget to subscribe for daily deep dives into the most pressing global news.